In the early 2010s, Wildcat Silver was a junior exploration company focused on the Hermosa property near Patagonia, Arizona. Their initial target was the Central Deposit, a near-surface oxide silver manganese zone. The Central Deposit contained a sizable amount of silver. One of the best drill intercepts they discovered had 19.8 meters of 420.6 grams per ton of silver, drilled in 2011. However, the mineralization was heavily mixed with manganese and hosted in complex geology. The project faced a major hurdle: metallurgy. Extracting both silver and manganese economically from oxide material proved difficult. Despite the metallurgical challenges, Wildcat Silver was able to define a large resource and maintain control of a large land package. However, without a clear processing route or high margin potential, the project didn't attract much interest from institutional investors. Wildcat remained under the radar and struggled to raise money. That all changed in 2015, when Wildcat drilled deeper beneath the Central Deposit and made a major discovery: the Taylor Deposit. Unlike the oxide silver zone above it, the Taylor Deposit was a sulfide system, rich in zinc, lead, and silver, hosted in carbonate rocks. The grades of the Taylor Deposit were excellent. Initial intercepts showed thick zones of high-grade zinc, lead, silver mineralization with strong continuity. With this new discovery, the company rebranded itself to Arizona Mining to better reflect its flagship project and broader commodity exposure. The focus had shifted completely. This was no longer a marginal silver exploration package. It was shaping up to be one of the most important polymetallic discoveries in the U.S. in decades. Between 2015 and 2018, Arizona Mining rapidly expanded the Taylor resource. Step-out drilling continued to hit thick, high-grade intervals, some exceeding 10% combined zinc and lead with significant silver. The deposit was flat-lying, laterally extensive, and ideal for underground mining. By 2017, the Taylor Deposit had grown into a multi-tens of millions of tons resource, and studies began showing strong project economics, low operating costs, high grades, and excellent infrastructure access. With rail, road, and power nearby, the location added to the appeal. At the same time, exploration began identifying nearby zones like the Clark Deposit, suggesting the district had even greater potential. Arizona Mining had scratched the surface of an entire mineralized system. As the scale of the discovery became clear, Arizona Mining's share price surged from under 50 cents in 2015 to over $6 by mid-2018. Investors who had bought into Wildcat Silver stock for pennies in the early 2010s saw massive returns. Meanwhile, the biggest mining companies in the world took notice. In 2017, South 32, a diversified miner spun out of BHP, made a $110 million strategic investment for a 15% stake in Arizona Mining. This was a strong endorsement and the first sign that a full buyout might be coming. Why were they interested? The Taylor Deposit offered something rare: grade, scale, and jurisdiction. With zinc markets tightening and high-quality development assets in short supply, the Taylor Deposit stood out as a potential cornerstone asset for their base metals portfolio. In June 2018, South 32 moved quickly, offering $1.8 billion to acquire Arizona Mining. The deal valued the company at a premium and was hailed as a win for both sides. Arizona Mining shareholders were rewarded, and South 32 secured a Tier 1 development asset in the United States. Since the acquisition, South 32 has increased the Taylor Deposit's reserves, continued expanding into the Clark Deposit, a manganese zinc zone, and advanced engineering and permitting efforts. The Hermosa project has also been designated under FAST 41, a U.S. federal permitting program for critical infrastructure, highlighting its strategic importance. What started as a small, overlooked silver explorer ended up being one of the most significant base metals transactions of the decade, all thanks to a deep drill hole.